The field of accounting offers a variety of career paths, each with its unique responsibilities, opportunities, and challenges. And among the most prominent paths are audit, tax, and advisory. Each of these areas serve different functions within the realm of accounting, and understanding their differences is crucial in helping you find the right career. And so in this video, I will explain what each of these career paths are, along with the responsibilities, average salaries, hours and lifestyle, exit opportunities, and the pros and cons of each. Hello and welcome back to the channel. If you're new here, my name is Andrew and I'm a certified public accountant and former financial analyst. And on this channel, we explore data-driven strategies to help us achieve financial independence. All right, so let's first discuss what each of these accounting services are, starting with audit. An audit refers to the inspection or review of a company's financial statements to ensure the financial records are fair and accurate. By law, all public companies' financial statements are audited each year by independent accounting firms. And so auditors are those responsible for examining financial records to ensure accuracy and compliance with laws and regulations. They assess the company's financial statements, conduct tests of their internal controls, and provide opinions on the fairness of the company's financial reporting. Auditors can work in external audit, where they assess the financial statements of clients, or internal audit, where they evaluate their own organization's processes and controls. Meanwhile, tax services provided by accounting firms help companies prepare tax returns and give companies advice on how to lower their tax liabilities. And so tax professionals specialize in performing tax returns, advising on tax strategy, and ensuring companies comply with ever-changing tax laws. Now, there are three main levels of taxation you can specialize in the US: federal, international, or state and local tax. Federal tax. Most tax work falls under federal tax. In this field of work, you mainly help individuals or businesses prepare tax returns for the IRS if you're located in the US. Since federal tax is very broad, you would usually specialize in an industry such as real estate or function like M&A tax. International tax. When a company does business in more than one country, it has to follow the tax rules of each of those countries, and this can get pretty complicated because every country has its own tax laws. International tax experts help these companies figure out how much tax they need to pay in each country, and they also help the company plan its business in a way that makes the most sense from a tax perspective, considering things like tariffs, trade agreements, and international tax treaties. State and local tax. State and local tax experts help businesses pay the right amount of tax in each state or jurisdiction. Because every state has different tax laws in place, as well as jurisdictions at the local level, state and local tax can be a lot of work if you work with a business that operates in a lot of states. State and local tax can also be tricky, since certain rules that apply at the federal level may apply differently across states. For example, a business might be allowed to reduce its income with a certain deduction when calculating federal taxes, but a specific state might not allow that deduction. Now, advisory services focus on helping companies improve their financial performance or reach certain financial or business goals. And so advisory professionals provide strategic financial advice to help companies grow, manage risks, and take advantages of opportunities. This covers a broad range of services, including management consulting, transaction advisory, and risk consulting, just to name a few. Advisory roles often involve analyzing business operations, developing financial models, and advising on mergers and acquisitions. Management consulting. Management consulting is the practice of helping businesses become more efficient, more profitable, and more effective at reaching their goals. Management consultants help companies out by analyzing their current practices, suggesting changes that can make a significant impact, and then help carry out those changes. Transaction advisory. Transaction advisory services provide financial expertise and strategic guidance to clients involved in mergers, acquisitions, or divestitures. These professionals can help clients throughout the transaction lifecycle, from pre-deal work to post-completion support, including financial due diligence, valuation analysis, deal structuring, and post-merger integration support. Risk consulting. Risk consulting is a service that helps organizations identify, understand, and manage risks in their operations. Risk consultants use their business, finance, and math expertise to help clients streamline processes and decrease or eliminate risk. Now that we've discussed what each of these services are, let's discuss a few other important factors, starting with the hours and lifestyle. Again, starting with audit, the amount of hours you work depends on the season, but according to studies, audit associates tend to work on average a bit more than associates in tax or advisory. As many of you probably already know, auditors have a busy season that generally runs from January to the end of April, as many companies have fiscal year ends that align with the calendar year. However, other companies operate on a different fiscal year end, and so auditors sometimes get busy at other times throughout the year as well. During busy seasons, if you're an auditor working at one of the Big Four accounting firms, you'll tend to have large public companies as your clients, and these companies have very strict deadlines in terms of when they need to issue their audited financial statements. And so this transfers onto the audit team in terms of the work hours and needing to get things done on time, and it sure doesn't help how much work is required to audit a company of that size. In tax, there's also a standard busy season from January to April. However, many people say tax return and other internal deadlines are pretty manageable because the scope of the work itself isn't as big as an audit, where you're verifying that the whole financial statements are reasonable. In tax, you look at those financial statements and you take the parts that are relevant for tax purposes and make adjustments. Now in advisory, the hours very much depend on your team and projects. Busy season isn't a thing, although you can expect to work a lot more the last few weeks of a project as a team scrambles to prepare to finalize the deliverable. In my experience, this was very much the case, as work hours were usually a typical 8 to 6 throughout most of the engagement, but ramped up quite a bit towards the end of the project. There were a few times I did have to work till 2 a.m. or so, and also work a few weekends throughout the year, but that was more of a rarity as opposed to the norm. Now, when it comes to travel opportunities, advisory takes the cake. In tax, you're generally free to work from home or at the office. Advisory and audit work requires more travel to client sites, but for different reasons. For auditors, travel can sometimes mean traveling to factories or warehouses to perform physical inventory counts, which isn't the most glamorous type of travel. Also, when you are traveling to client sites, you're often in a big conference room with the rest of your audit team, grinding away long hours together. In advisory, on the other hand, travel can be more varied and exciting. Advisory professionals often work on projects that require them to meet with clients or teams in different cities or even countries. And so if you like traveling, advisory is the best choice out of the three. Moving on to compensation, the average pay differs slightly between the three services. In both audit and tax, entry-level accountants working at one of the Big Four accounting firms on average earn around $70,000, with senior associates making $93,000, managers earning around $140,000, senior managers earning around $185,000, and directors earning about $206,500. In advisory, entry-level professionals working at a Big Four accounting firm earn on average $82,500, with senior associates earning $121,500, managers earning $170,000, senior managers earning $207,500, and directors making on average about $280,000. Keep in mind, this is just base pay and doesn't include any bonuses or other forms of compensation, and actual salaries vary depending on your work location. Now, the reason advisory roles tend to offer higher salaries than audit or tax positions is due to the high value nature of their work. It boils down to how much clients are willing to pay for advisory services as opposed to tax or audit. Every company needs to comply with tax laws, and audits are a legal requirement for all public companies, and so companies pay for tax and audit services mainly because they have to. Getting audited or making sure they file their taxes properly aren't activities that help them make any money, so they try to avoid paying any more for these services than necessary. On the other hand, companies generally pay for advisory services because they want to. Companies that hire advisors generally believe that the advisory firm can help solve a problem for them. That's why they're willing to pay advisory professionals more than tax and audit professionals. Now, when it comes to exit opportunities, advisory professionals tend to have a wider range of exit opportunities, mainly because it's less specialized. Audit and tax will give you lots of options within the field of accounting, but not necessarily much beyond that. In audit, common exit options include transitioning into industry positions, in many cases working for the companies or clients they audited in the past. This can include roles within the accounting department of these organizations or the financial planning and analysis department. Auditors can also transition into accounting-related advisory roles, such as accounting advisory services or financial due diligence. In tax, common exit options include going into wealth management or financial planning, specifically if you worked in private tax for individuals, working for government tax authorities like the IRS, or transitioning to in-house roles in companies' tax departments. In advisory, possible exit options include corporate strategy, corporate development if you have experience in M&A, or other advisory roles like restructuring. You can also work a few years at a firm, then go get your MBA and come back to work at that firm for higher pay. Lastly, in order to help you decide which is the best career for you, let's look at the pros and cons with each service line. Looking at the pros of audit, the first is that there's generally good job stability with audit careers. Because companies need audit services no matter what, there will always be a demand even when the economy is bad. Second, you develop a strong foundation in financial reporting and controls that is useful to know in general. Accounting is a language of business, and so having a good understanding of financial statements, internal controls, and other accounting topics is a huge bonus that can open up future opportunities. When it comes to the cons of audit, the routine work can become monotonous. There is a common perception that audit is boring or unglamorous, and while I would argue that there aren't many careers in general that are necessarily fun, the work of auditors is in fact pretty similar client to client. Second, you will have to work around busy seasons, which may mean you can only take vacations at certain times in the year, and also be okay with the expectation of working longer hours during the busy seasons. Looking at the pros of tax, the first is that you will often have a more predictable work schedule compared to audit or advisory. Very few clients will require their tax accountants to be on site, and so you get a sense of greater flexibility. Second, having an in-depth knowledge of tax law is critical and can be beneficial outside of just your job, as taxes affect everyone. Now, looking at the cons of tax, similarly to audit, you have to work around busy seasons, which involves working long hours consistently for a set period of time throughout the year. Also, tax laws are complex and often change, and so you will be required to constantly learn and adapt to these changes. Lastly, looking at the pros of advisory, the first is that unlike tax and audit, clients choose to hire consultants because they actually want to, not because they have to, which usually means they'll treat you better. Second, advisory typically offers a more diverse and dynamic work environment than audit or tax, and as mentioned earlier, generally offers higher pay as well. When it comes to the cons, the first is that it can be viewed as a less stable career than audit or tax because advisory is more likely to be affected by economic downturns. For example, over the last few years, deal activity slowed down due to challenging economic times, which ended up resulting in many transaction advisory practices having to lay off workers. Second, if you are required to travel on a regular basis, it can end up straining your personal life quite a bit. Now, with all that being said, the most important thing is to do what you find most interesting. The more interested you are in something, the more likely you'll enjoy it and be good at it. I spent 4 years in advisory/consulting and really enjoyed my experience, but I've also met many people who have enjoyed their careers in audit or tax as well. Now, if you want to learn about other interesting career opportunities in business, feel free to check out either of these videos. Thank you all for watching, and I'll see you in the next one.